observed that in spite of increase in gross income due to increase in volume of feed sales and feed price, the PBT has come down by 36% compared to the corresponding quarter Q3FY20 of the previous Q3FY25 due to steep increase in raw material prices. As you know, there are three major raw materials. They are fish meal, soybean meal, and wheat flour, which significantly impact the raw material cost of feed. While wheat flour prices were less volatile at 21 to 24 rupees per kg during FY21 and first three quarters of FY22, the other two raw materials, fish meal and soybean meal, have been highly volatile, leaning towards higher prices. During FY20, the fish meal average price was 89 rupees per kg, went up to 94 per kg, which was further went up during first three quarters of FY22 to the extent of 102 rupees. The main reason appears to be shortage in fish catches coupled with large export demand push up the prices upward. It is hoped that as fish catches improve and demand for export reduces, which is expected in a short time, maybe about 15-20 days, the prices would help the stabilization of fish and fish meal prices in due course. Similarly, the prices of soybean meal also increasing steeply in the past 9 months of FY22 compared to FY21 and 20. In spite of several steps initiated by the government, such as permitting import of soybean meal for a short span to check the unabated increase of soya, suspending trading of soya in NCDX, even with a good crop, the prices are not coming under control. The average soybean meal price has been 70 per kg during the first three quarters of FY22 compared to about 43 rupees in FY21. However, it is hoped that the steps taken by the government will yield results in due course and soybean meal price will stabilize. Recently, the government, in order to control hoarding, issued order prohibiting stocks of soybean meal beyond the 200 metric tons by traders. Increase in sale prices of feed is one of the ways by which we can maintain the margins. However, in spite of increase in the average feed price realization by about 8.07 rupees in the 9 months, 3 times increase for 2 rupees once, 3 rupees 15 paise once, and 4 rupees 25 paise the third time. Due to steep increase in RMM prices, the raw material cost increased by about 10.48 per kg, leaving a difference of 2.41 paise unabsorbed. However, with soybean meal and fish meal prices likely to come down gradually, expected to stabilize the cost of raw material price in near future, and margins are likely to improve. In this context, it is relevant to mention that a cautious approach has to be taken before considering any price increase due to governmental regulatory constraints and recent budget decision to bring back customs duty on feed import to 5% from 15%, which was increased to 15% in July 21, very recently. However, the government took the decision to bring it back down to 5% again in the recent budget. Representations have already been made to the government to restore the 15% import duty in the interest of the domestic industry, because large domestic industries are suffering because of the competition from the imported feed. Let me discuss about the shrimp processing division. The gross income for Q3 FY22 is 270 crores as compared to 273 crores in Q2 FY22, registering a degrowth of rupees 3 crores at 1%. The gross income in Q3 FY22 increased to 270 crores from 242 crores compared to corresponding quarter in Q3 FY21, an increase by 12%, mainly due to increase in sales volume by 499 metric tons. However, for the 9 months ended 31st December 21, gross income registered an increase of 7% to 718 crores as compared to 670 crores in corresponding 9 months of the previous year. The increase is mainly due to increase in sales volume by 701 metric tons from 8,576 metric tons to 9,277 metric tons, and price realization remained at almost the same level. The PBT before the exceptional item for Q3 FY22 is 26 crores as compared to 41 crores in Q2 FY22, a decrease by 15 crores, represents 36%, mainly due to inclusion of MES benefit of rupees 14.4 crores pertaining to FY21 received during Q2 FY22. Excluding impact of MEIS, the Q2 FY22 the PBT is rupees 27 crores as compared to 26 crores in Q3 FY22, which is almost the same level. The PBT in Q3 FY22 is 26 crores, a decrease from rupees 33 crores in the corresponding quarter Q3 FY21, a decrease by 19%, mainly due to increase in ocean freight raised by around $5,097 per container. However, for 9 months ended 31st December 21, registered a PBT before the exceptional item of 79 crores as compared to rupees 107 crores the previous year. 9 months, a decrease by 26%, mainly due to increase in ocean freights by around $3,681 per container. The average freight rates during 9 months of FY22 is rupees 5.41 lakhs per container as compared to 2.67 lakhs per container during the corresponding period of FY21. RODTEP. The Government of India had announced a new incentive scheme, remission of duties and taxes on export products, introduced effective from 1/1/21 in the place of MEIS. As per the scheme announced by the government, the company is eligible for RODTEP scrips to the extent of rupees 18.48 crores from 1/1/21 to 31st December 21, for which no provision has been made and will be accounted for as and when it is received. Status of recall products by AFFPL. As you are aware, the company had to recall some of the consignments of cooked shrimp products found to be with salmonella contamination by USFDA and CDC in the recalled products. The recall had to be made twice in June 21 initial and August 21 expanded. The recalled products are not allowed to be brought back to India and they have to be destroyed in US itself. As a result, the company is liable to compensate import customers for recalled products and related expenses of destruction charges, etc., to the extent of the product returned and destroyed. The company is also liable for reimbursement of medical and related expenses to the consumers who fell sick and underwent treatment after consuming the recalled products. Insurance coverage. The company has product liability insurance coverage to medical and related expenditure mentioned above. However, there is no insurance coverage in respect of reimbursement of product returned and destroyed, and also other related expenses such as product destruction, call center management, storage expenses, etc. This costs had to be met by the company. In the financial statements, the provision has been made for the 9 months, a sum of 27.56 crores. Q3 FY22, the provision of 6.25, Q2 FY22, rupees 17.15 crores, and Q1 FY22, 4.10 crores has been made as an exceptional item towards value of returned destroyed product and other related expenses on actual basis and as and when received on a quarterly as and when received. The provision is being made on quarterly basis. Out of the said provision, an amount of rupees 6.11 crores has been returned to the customers. The provision in the financial statement has been made on the basis of the returned and destroyed value of the products together with the related expenditure as stated above is 27.50 crores. As regards the claims for bodily injury caused by the consuming company's contaminated products under recall, the company's insurer, New India Assurance Company, has appointed a surveyor recently for processing the claims. So far, the company has received 16 claims towards bodily injury, which have been forwarded to the insurance surveyor for processing. Since the liability has been covered under the Commercial General Liability Insurance Policy, no provision has been made in the financial statements. the present status of termination of recall and reinstating green list status. The company received communication from US FDA stating that all the information, documentation required from the company have been received by them, and it will take some time to terminate the recall, which will be informed in an automated email. The company has shipped out 5 containers of cooked shrimps on clearance by US FDA. These containers, the green list will be restored, lifting the red alert, which is expected to be happen about in 45 days. Once the red alert is lifted, the company will be in a position to accelerate export of cooked shrimps. PLI scheme application made by the company. On November 29, 2021, the Ministry of Food Processing published the list of qualified applicants based on fulfillment of basic criteria, and also the applicants eligible for the PLI scheme on the basis of ranks assigned and allocation of funds earmarked by the Government of India, rupees 993 crores. In all, 11 seafood processing units, including the company, have been qualified and are selected for PLI scheme by earmarking funds of 79.44 crores to each of the applicants in fulfilling the achieving certain criteria. The company has completed necessary documentation, including providing bank guarantee to the department to comply with the conditions of PLI sanction. Industry overview and future outlook. As the world gradually recovering from COVID-19 impact, you may notice that the performance in calendar year 2020 was much better than calendar year 2020 and is expected to be still better in 2022. At the start of this year, the environment for shrimp culture in the country is highly favorable and a promising year appears certain. The total production of shrimps is expected to increase as the farm gate prices are at all-time high and remunerative and climatic conditions are favorable. The company estimates that India would be able to produce about 8 lakh metric tons of shrimps with an estimated consumption of about 13 lakhs metric tons of shrimp feed. Shrimp production and feed consumption in 2021 and company plans. Shrimp feed consumption. The shrimp feed consumption in India declined to about 9.55 lakh tons in the calendar year 2020. However, as the demand for shrimps increased in calendar 2021 due to return of normalcy and favorable shrimp culture conditions, the shrimp feed consumption grew by 10 to 15% over the previous year, with consumption of shrimp feed around 11 lakh tons. The company's feed sales during the calendar year 2021 was about 5.36 lakhs metric tons and expected to be around 6 to 6.5 lakhs metric tons in calendar year 22, an increase by about 15 to 20%. The company is expected to maintain its market share of about 48 to 50%. As the demand for shrimp feed is expected to increase, the company is in the process of expanding the shrimp feed capacity by setting up a new plant with an annual installed capacity of 1,75,000 metric tons with an estimated capex of 125 crores and expected to commence commercial production by June 2022. Shrimp processing and export. And the production and exports from India in calendar year 2021 was around 6.5 lakh metric tons. However, during the current year, calendar year 2022, the production and exports of shrimp is estimated to be around 7.5 to 8 lakh metric tons, a growth of about 10 to 15% over the previous year. The company's shrimp exports in calendar year 2021 is about 1,219 metric tons. The estimated export in calendar year 2022 is about 13,500 metric tons, a growth of about 10 to 12% over the previous year. The company envisages to invest 81.32 crores towards capex for setting up processing new units with an estimated capacity of 7,000 metric tons per annum. With this, I would like to conclude with a positive note that aquaculture industry is poised for a relatively improved performance in 2022 compared to 2021. Thank you. Now we'll take up questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to restrict to 1 question per person in the initial round and may join the queue back for further questions. Thank you. first question from Mr. Dipesh Kashyap from Q3FY22 Securities. Please go ahead, sir.
Yeah, sir. Good evening, and thanks for taking my questions. Sir, given the current price of soya meal and the fish meal, in my view, you will need another 4 rupees per kg price hike to restore your profits to historical level. So is that assumption correct? And secondly, given the farm gate and the international shrimp prices, right, they look very favorable. So do you think you will be able to take the price hike in the coming months?
Definitely, good evening, Mr. Dipesh. Definitely, we would be able to take the price hike because the shrimp prices are high. And also, the situation is the raw material prices are rising, and we are looking into it.
By when do you think, sir? Because I think this February is already over. So do you think in the coming weeks?
By this month and first week.
Oh, great. And sir, also given the inventory, just wanted to say, how are the inventory levels in US? Because last year the US demand was very strong. So do you think it can be sustained this year also?
The inventory levels in US, I believe by end of December, actually the Christmas season and the New Year, the consumptions were good. And the demand is there.
Okay, great. And the price hike that you said, sir, of the just a follow up on this, please. Yeah.
Sorry.
The price hike that you said. Okay.
If you could come back, Mr. Kashyap.
Can I just complete this?
Would request if you could come back in the queue, sir.
Okay, thank you.
Thank you, sir. Next question from Mr. Ashwini Agarwal from Ashmore. Please go ahead, sir.
Good afternoon. You spoke about the import duty protection of 15% going down to 5% being an issue. But my question is that if the raw material prices such as fish meal and soy meal are driving up your costs, those would be more or less global events, right? Or is there anything specific that's hurting you more than it's hurting other producers?
No, see, there's a global pricing. There's a demand and supply across the globe. In fact, the prices of fish meal and soya meal have been going up across the world.
Another thing which I may add to what CMD said is that these companies which are exporting to India have certain advantages over our Indian conditions because some of the raw material like soybean meal, which is GMO seed, they will be getting at a slightly lesser price than what we are procuring locally. Our prices are a little bit higher. And similarly, because of the ocean price and all the transportation charges for fish meal, if we import it will be more. But the local price, there is a lot of demand for export of fish meal from India. So these two coupled, the advantage that the foreign companies are getting is apart from the local duties are also less. Number two, the soybean prices are less. And they added to that, they are getting this 10% advantage. So they are passing on that advantage to the local dealers. So that is what is happening. But we are making the same. They has met the senior officials in the Delhi, and they told them that because after there is a lot of representation, they have increased it to 15% only in July 21. And again, because of this budget this year, now they have increased to 15%. We are now again given representation to bring back to 15% from increase the 5% to 15%.
Yeah.
We hope that we'll be able to, government will understand the situation because a lot of inbuilt installed capacity is available in India for feed manufacture. Definitely to protect the domestic industries and also the Prime Minister's the policy of Made in India, and this will be a value addition. Definitely, I think the government will take a positive look at it.
Yeah, we are representing to the government of India regarding the duty for the imported shrimp. We are working on that, and also the ocean freights for the imported oil has gone up very high. They have an advantage of duty, the GMO soya but also when they export, the container costs have gone up very high. It would we should work with the government and see that the 15% is retained. We are working on that.
So one quick question
Mr.
connecting this. Madam, it's the same question. Please give me a second. Just connecting this to what the previous caller had asked. Assuming the duties remain where they are, do you have the room to take a 4 rupee price increase?
Yes, definitely.
Okay. Thank you so much.
Thank you, sir. Next question from Mr. Nitin Avasti from InCred Equities. Please go ahead, sir.
Sir, thank you for the opportunity. One question, very straightforward, on the PLI scheme. If we read through the details, what it says is on value-added marine products, you get an incentive of 10%. Add the Rotterdam incentive to that, add the duty drawback to that, you are looking at 15% different incentives. Is there any notification, any review from the government that one of these incentives will not be allowed if you take the PLI incentive, or
there's nothing like
you will be able to take all the incentives?
There's nothing like that, Mr. Avanti.
Oh, got it, sir. And just a follow-up on that. If you are going for that, wouldn't it be prudent to start and produce as much shrimp as possible to get the PLI incentive? And if you do that, how much is allotted to the company for the PLI scheme?
What is it? I don't get you.
No. If you are going to get incentives of close to 15%, it should be in the company's best interest to produce as much as processed shrimp as possible. And if it does that, how much is the money allocated specifically to the company or the sector, in which how much is to the company, or is it like competitive that this much money is being allocated to the sector and whichever company maximizes can get the maximum benefit in it?
It is 933 crores which has been allocated to the sector.
Okay.
And for the company, it has been around 80 crores. The approximate.
Okay, approximately 80 crores benefit. Okay, got it, sir.
The PLI scheme is the PLI scheme, for you to understand. It is more than what we do this year. Next year, how much we do, we get only for that. Incremental.
Thank you, sir. We'll request Mr. Avasti to come back in the queue again. We'll take the next question, sir. It comes from Mr. Deepak Saha from Shavat SEBI Registered. Please go ahead.
Hi, sir. Thank you for taking the question. So again, if you can emphasize a little bit on the price hike part, because the realization currently stands at 78, and the realization currently stands at 75, whereas it should have been around, as per the previous announcement, close to 78. So why exactly we have not taken the price hike in this particular quarter, and when we are planning to take this going forward?
As we said, we are going to take the price hike in the first week of sometime in the first week of next month.
Okay, and it would be in the same in the same alignment, sir. The announcement that we made earlier.
Pardon me?
The range of the price hike would be that 4 rupees range, or we can further expand it.
We are working out on that. Yeah.
Okay. And so regarding this product recall, if you could kindly allow me this question, because this is.
Sir. If you could come back in the queue, please.
Oh, thank you.
Thank you so much. Next question from Mr. Yogesh Jeswani from Mittal Analytics. Please go ahead, sir.
Thanks for the opportunity, sir. So my question is on the proposal that we have put forward in our board meeting the other day regarding the salary hike that management is seeking. So given the kind of cash flows that we have and the investors' concern for last several years of the usage of cash, isn't a better way to reward promoters as well as the shareholders is to go the way of buyback or something, or a higher dividend instead of increasing managerial remuneration? Your thoughts on that, sir?
Well, we are giving a dividend, good dividends, and we are rewarding the investors on the good dividend. And I think if the performance is good, we may go higher dividend also. And regarding the salary hike, see, there is a lot of thing, Mr.
Our GM Finance will explain the reason for hike. Please explain, Shanti.
Hello, good afternoon. Mr. Deepan, see, our whole-time directors' remuneration is a combination of fixed portion and a percentage of profits. So, and which is within the overall limit of the Companies Act, and the Companies Act, the limit was fixed long time back. I think at the inception of the Companies Act. So the fixed portion is expected to cover the increase in the cost of living and other inflation year on year. So when we are taking the overall commission and this together, it would be exceeding the overall limit fixed by the Companies Act. Now the Companies Act is allowing you to take more percentage. So that is why we are going for an increase. And it is
what Shanti, let me tell you one thing, because these remunerations are fixed, but it is not that we cannot increase remuneration, but there are certain conditions which were prescribed, and if you look at the table, the schedule, the Companies Act, the fixed salary is given in a specified manner. We cannot exceed that. If a simple logic, if you apply, let us say it's in the 5%, if your salary itself, the salary and other effects which are essential and which over a period of time, even normal an employee gets a 10% increase in his salary over the years. If you take last 10 years, the schedule has not undergone. In fact, it has gone, it was prescribed much earlier. If you take even the 10% annual increment, it could be much more than 100% increase that is needed to be made in order to make the salary itself, the fixed percentage, the fixed component of the salary, the remuneration. See, once you give the 10%, what is happening is your overall remuneration is the profit, the percentage of commission on the profit is getting drastically reduced, which is it is based on the performance of the company. And moreover, the performance of the company is again dependent on several other factors. So like, for example, in our own company, we are seeing that the raw material prices have gone up, the sale price realizations have come down, so the margins are reducing. So even if you put percentage commission, it won't really make, but that is not the criteria which is contemplated under the Act. So you have to see a lot of the work has increased, the challenges have increased, the competition has increased, and the company is growing, the expansions are taking place. So the directors, whole-time directors work in the interest of the company and the investors. So these are the reasons by which we consider, because we have not touched the terms of fixing the remuneration, salary particularly, we have not gone through it till now. We have only done now because of this specific reason we have done it. And it's rather more, now it is the shareholders have the power to give them whatever the relief that they consider that the management deserves, we should give it. That's the reason why we have gone into that.
Absolutely, sir. Thank you.
Thank you, sir. The next question from Mr. Aman Majreta from Argumenta Research. Please go ahead, sir.
Yeah, sir, actually I wanted to ask, given that the raw material inflationary scenario is going on, so how are we looking at the demand side? Are we seeing a robust demand or is there some reduction? And also, can you just explain me why Q3 is a weak quarter seasonally?
Pardon me, your voice is not clear, sir, and we are not able to understand.
Hello. Is it audible now?
We can hear you, but your question is not clear.
Mr. Majreta, there is a slight echo in the voice. If you're using a headset, if you could remove that.
Now it's audible?
Yes.
So I wanted to ask, given that the raw material inflationary scenario, so how are we looking at the demand side? Are we seeing any robust demand or is there some reduction? And can you just explain why Q3 is a seasonally weak quarter for us?
Pardon me?
Q3 is a week, like in Q3, generally the capacity utilization comes to around 65 to 70% against like 85 to 90% every quarter.
This is a seasonal industry. Shrimp culture is a seasonal industry. This is two crops. I think if you are following the shrimp industry, it is a seasonal industry. Actually the crop starts, the farmer seeds around in the from mid of January to almost first week of April, and he starts first crop. He starts harvesting from end of April to July, and the second crop starts around June. This is how the culture goes on. At the end of the year, they harvest. So this is a seasonal industry. The third quarter, if you take the sales of every third quarter, you can see it is the same every year.
Okay, and sir, also on the first part of the question, I just wanted to ask the first part of the question. How is the demand?
Come back in the queue, please.
The demand of the seafood, the demand for the seafood is going up, and the culture is going up, and that's why we are expanding, and we are expecting the.
Thank you, sir. We request Mr. Madrecha to come back in the queue, please. Thank you. We have a follow-up question from Mr. Nitin Awasthi from InCred Equities. Please go ahead, sir.
Hello, sir. Thank you for the follow-up. I would like to ask why was there a company incorporated the Thai unions this thing? It was specifically not mentioned what, but the Thai union has contracted with the promoters of the Avanti group to form a separate company for some business of Thai union in India. Why is that being kept out of the purview of Avanti Feeds?
The business which Thai union, and it is the business of RBF. It is the business of RBF. RBF is a food ingredient company which is a more of a seasoning business and which is much related to poultry, meat industry, and also part of seafood industry. See, since it's a trading activity where Avanti Feeds is a major production company producing shrimp feed and into various aquaculture related activities. It is trading activity, and also it is only the 51% is held by the RBF. It is not. It is a minority share. So it is not much activity what we have. And since it's a trading business, see, Avanti has been more of a manufacturing and direct customer related.
I think what Chief said, I would like to add that see, it is as he said, MD said, the 51% is held by RBF and 19% is held by Thai Union. So together 70% is held by the foreign company, and they want to trade their own products under their brand. And we are putting only 30%. The management is by them only. So, and also it is not much connected with our regular business. As he rightly said that we are not manufacturing and we are not responsible for the products inside. And all these things are taken by them. So we are only, because being in India and one of the large groups with reliable reputation here, as a group they have considered us as a partner. That is the criteria they have adopted. As a matter of policy, we want to focus more on our quality of the product, expanding our activity, focus on this industry, manufacturing and feed and processing and expand. We are going for expansion. We are going for processing plant also. We are going for expansion. We want to keep our focus more on these products rather than getting into altogether a new business, which we don't have at all experience in that at this point of time. And the management is that because that is their company, the holding company is the RBF, they are into that ingredients manufacture and distribution. They want to do their import and do their trading activity here.
Understood, sir. Understood. So for the company, like you mentioned,
business also not in significant way. It is a much less business. Maybe 5-10 crores in this thing. It will not be more than that. So we do not want to get into that. This is the reason why we have kept it different from the main Avanti feeds.
See, it's a trading business, and the management is not in our hands. And the brands are, as Mr. Rao said, is not our brands, and it is the RBF brands. So anything, it would be not of the interest of the company.
Understood, sir. And on the things that the company is actually expanding on, like the fish feed segment, if you could shed some light on the concrete plans to go ahead and, like you mentioned on the aqua shrimp segment, that we are actually seeing very, very good demand. How is the demand, and how do you foresee the demand there for your produce? Because you had mentioned species like sea bass, which actually still need a lot of support to be domesticated in India.
Yeah, it takes some time. Actually, it takes some time, and we are working seriously on that, and the process is on.
By when can we expect concrete results, sir, or at least concrete plans?
It may take another 6 months to 1 year.
Got it, sir.
Thank you, sir.
Thank you.
The next question from Mr. Akhil Hazari from Robo Capital. Please go ahead, sir.
Hello, good evening. Am I audible?
Yes.
So I just want to know, could you give us any revenue guidance for FY23 and FY24? And, as the raw material prices stabilize, going forward, what are the margins that you're targeting?
We would be, we are targeting around 10%.
10% EBITDA margins?
10-12%.
EBITDA margins, right?
Yes.
Oh, and revenue guidance?
Revenue, I think, the revenue should grow another 15%.
15% for both FY23 and FY24?
FY21, we may go by about 10 to 15% will go. We are targeting, this is a seasonal business. We are at this point of time, in the beginning of the season, we are expecting it to be very good. If things go well without any problems in the process, we should be able to easily achieve about 10 to 15% increase in the revenue growth. And margins, it all again depends on the raw material prices, the prices, and how much price hike we can really take it. All these things put together, we are targeting, now it is around 6%. 5 to 6%, we are targeting about 10% by once on the raw material prices, hoping to be stabilized. Similarly, we're hoping to get some price hike also. Put together, we should be able to achieve about 10% EBITDA.
Okay, fine, good. That's it from my end. Thank you.
Thank you, sir. The next question from Mr. Puneet Mittal from Global Core Capital. Please go ahead, sir.
Hi, thank you for the opportunity. Can you hear me fine?
Yes.
Yeah, thank you. I have been following this company for many years, and I think this is more of a suggestion than a question. As Mr. Rao just said, for the last few years, there's been constant challenges in the business. And even after that, many shareholders have stood with the company thick and thin. However, the biggest wealth for both the shareholders and the management will be created through the right valuation, which is discovered in the market. I think with the current steps that the management has taken has created a lot of red flags, which is including the cash that is kept on the book, the increase in remunerations, having businesses outside the purview of the core business and everything. Now, I know you have defended some of those things, which is fair, but this will only create more red flags for the company, and that is very much visible with the valuation of the company, which has been very stagnant for last few years. So I think I just expect, and I just would like the management to consider this, that why is the market valuation of the company has been stagnant, has not been rising, and if we continue to add more red flags, it may create further devaluation of the company. Thank you so much.
Yeah. See, let me just address the first couple of questions which you had, the red flags which you considered. But we at the management level, we do not consider as the red flags because, number one, we talked about the funds, keeping the funds, because in a very tight financial market situations, it is always to be a cash comfortable position where you would be able to maintain your cash flows intact. See, maybe a little bit more than what is required may be there, but certainly that would only help in case of need. Let me tell you that if you go to a bank, supposing we have 500 crores or 600, 700 crores of stocks we have maintained in the last 3 to 4 months to maintain, because the price hike of all these raw materials, abnormal increase in price where the prices have gone up to the roof, but we have been able to maintain to reasonably extended by 5% less compared to the market increases. How it could happen? It could happen because of our policies of giving the cash and carry basis. We purchase raw materials, we get better terms, and these cash, if not available, we would have gone to the bank for borrowing. So the borrowing cost, what it is compared to what we are getting in the markets now for our investments, whether it's mutual fund or any other, it is much more costlier to borrow the funds. And moreover, as you know that the banks are very tight, they are not giving a liberal attitude towards under these situations, the markets, there is a lot of apprehensions by the banks to extend credits because of the market situation. In these circumstances, when the tough time is going on, it is always better to be with cash in hand, so that we have been able to maintain these performance levels, in fact growth, because of these constraints. If we have financial constraints, definitely it is very difficult to maintain this level of performance. That is number one. I think I have addressed the first question. Coming to the second question of managerial remuneration, apart from that, I did not mention earlier that our income tax structure is, we are paying 43% income tax. So when you tell me how much income tax has gone up, when you get 100 rupees, you pay 43 rupees, the income tax. Is it not a constraint for anyone who gets the income? Between that, it does impact, is it not? So, and also, as I told you, the reasons which I have already mentioned, that there are the efforts that are being made, and there has been a very stagnant structural remuneration payment to the managerial person over the years, which is completely controlled by the government. And these are the constraints under which the management is working with a lot of pressure. I think they deserve, the management, the shareholders as an investors, you should appreciate this and cooperate. That's what we expect, because we are taking care of you, investors.
Thank you, sir.
Okay, thank you.
The next question from Mr. Pranav Parekh. He's an individual investor. Please go ahead, sir.
Thanks. My questions have already been answered.
Thank you, Mr. Parekh. We have a follow-up question from Mr. Deepak Saha from Savat SEBI registered. Please go ahead.
Thank you for that. So for the product, in the exceptional part, we have again recorded 6 crore of adjustment. So is this associated with the products that we recorded in the second and first quarter, or there's any fresh incidents that has taken place?
It's all earlier product recall only. What we are doing is, every quarter we are reviewing the situation. We are providing in the financial statements depending upon the claims that have been received during that quarter. So the 6 crores which you are referring is for this quarter.
So it is the old recall only.
It is old recall only for this quarter. Claims received this because the recall is the only one recall. That recalls which we have made earlier. There is no fresh recall.
Okay, so there is no fresh recall. Okay. Thank you, sir.
Thank you. The question comes from Mr. Yogansh Deswani from Mittal Analytics.
So thanks for the opportunity again, sir. So my question to you is, you mentioned in your opening remarks that we are putting up another capacity for process shrimp, and similarly there are several other players in the industry are also putting up capacity. Is it better now, sir? Is it better now?
Yeah.
Yeah. So I'm saying, you mentioned in your opening remarks that we are expanding our processed shrimp capacity, and similarly there are other players who are also putting up significant size capacity out there. So if you could share your thoughts on how do you see the industry utilizing this increased capacity that's coming on stream, given that the growth has been slower for past few years, and only of late we are seeing some better growth. So if you could share, how do you expect the industry to fare out with the increased capacity, sir?
Sir, good afternoon. This is Nikhilesh. So the growth rate for the company has slowed down due to COVID. There were restrictions, as you know. It is a manpower intensive industry. With the whole COVID situation, the last 2 years we were having reduced manpower footfall in the factory due to social distancing activity. And on the increased capacity, as you know, there are only about 7 companies or 7 to 8 companies that have been which have been selected for the PLI scheme, who would probably go for capacity expansion. But we are confident that it will increase. We will continue to increase our growth as we continue to explore new products. We're setting up new production lines, which there is demand for in the market. And our existing customers are also do have appetite to take in more production, and also we look towards increasing our capacity utilizations and reducing our overhead going forward. So I hope that answers your question.
Sure. And sorry, sir, I missed in your remark, what is the timeline for commencement of the increased capacity?
We are in the process of land acquisition, so another 1 year we should be able to start commercial production.
Okay.
So also, there was already a capacity expansion around August, September last year. We can see that in our old unit in Gopalpuram, which we already see that we have increased the production by about 12% for the whole year, for the 9 months in question.
I can add what Nikhilesh said, that this particular pre-processing facility has been completed and we are awaiting certain approvals. We are waiting for the approvals. The trial runs have been completed and ready for take-off. This will definitely help in increasing our capacity utilization. And when the new plant comes, we'll be able to increase our capacity further.
Understood.
Next question from Mr. Chokalingam Narayanan from BNP Paribas Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity. So, with regards to you talked about the industry, likely to be 12.5 to 13 lakh tons in terms of shrimp feed. Is it suffice to say that we would be looking to maintain market share, and that could actually, portend a volume growth from slightly under 5 lakh tons to 6 lakh 25 to 6 lakh 50,000 tons for the year in terms of shrimp feed? That's one. Second is with regards to the processing business. You mentioned about the green list and this one. So there, if we had a free run and if we had that green thing, how much would our volumes have been in the processing side?
Let me first address the first question, then Nikhilesh will answer the second one. The first one, the feed, as you know, that we have already 6 lakh tons capacity, and we are now adding 1,75,000 capacity, which will go into streamline by June, by end of May or early June. So we will have a total capacity of 7,75,000, and we are targeting about 6 to 6.5 lakh tons of feed sales, which is almost like about 50% of the market. So I think this will comfortably we can achieve this target without any difficulty, because with all our infrastructure, with marketing, with quality control, with our technical assistance and all these things, we should be able to comfortably achieve this target. Okay, now Nikhilesh will answer the second question with regard to red alert and green list.
So we have already made an application to the FDA around June last year, to which they have responded with additional queries. On those queries, we have engaged an international food consulting team who have come in and also evaluated our manufacturing processes, and we have created along with them a response to the FDA, which we are putting a petition again, which should be approved in the next 45 to 60 days. There is no timeline guidance given by the FDA, but we are assuming that it will take that much time on previous experiences. Coming on the green ticket, so around about 25 to 30% of our sales were usually into the cooked products historically, but that should not be an issue in terms of volume. We are going to focus on doing existing products and adding new products which we are not in red alert for. So if there was no red alert, the volume would be up about 10-15%, but we are focusing on covering up that volume in our existing products itself.
Thank you. And one last question from my end is the taxation on the to PBT on the frozen Avanti frozen side was on the higher end. If you could help clarify on that.
Tax, yeah.
Hi, this is Shanti. Good evening. The income tax in AFSPL is variance is due to timing difference in product recall and max credit in deferred tax. Otherwise, if you compare 9 months to 9 months, it will be almost same.
Thank you, ma'am. So that should be the normalized level that we should take.
Yes, you should take the 9 months, which would be the normalized levels.
Thank you.
Thank you. As there are no further questions, I would now like to hand over the floor to the management for closing comments. Any closing comments?
Yeah. Okay. Comments.
Closing, sir. So thank you.
Sorry, I was just thinking something else about the questions. Anyway, thank you very much for the call that we had. Very interesting and good questions, and also I think we could able to answer most of them. But definitely there will be certain questions which remain still not fully satisfied, but still things keep going, and we are sure that the company will be able to achieve much better performance in the 2022, which we are looking ahead for it. Thank you very much.
Thank you, sir.
Mamita, you know what, on behalf of KFin Tech and the entire team of Avanti Feeds, we'd like to thank them for giving us the opportunity to host a call, and we also appreciate the interest and the analysts of the participation. Thank you, and have a good day.
Ladies and gentlemen, with this we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good evening, everyone.
Your conference is no longer being recorded.